What's going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so that you don't miss future videos. And if you like what you see in this video, make sure you hit a like so that dividend warriors out there like you guys can see some videos or give some people some ideas to add to their dividend portfolio arsenal. I'm actually pretty tired. I just did a push-up challenge. I just posted the Darth Dividend push-up challenge on my Instagram channel. So if you guys are new to this channel, make sure you subscribe to my Instagram channel as well and follow my Facebook page where I post investing humor as well as some of the videos that I invest in. So if you guys are subscribed to all three, that way you won't miss any future videos. But make sure you subscribe and hit the notification bell on here and give me a like. All right, let's start with the three stocks. So first thing, the market's down. I want to give you a quote. This is on capitalizing on opportunities. At the end of the day, let there be no excuses, no explanations, and no regrets. This is by Dr. Steve Maraboli. So this is really about capitalizing opportunities, no regrets, no doubts, no explanations. You got to go in. You got to go in for the kill in stocks when they're taking a hit. You got to have money saved up for, as I call, strike money, so you can invest in opportunities when the market takes a little bit of a dip. Now, let me get this straight. I don't want anyone to lose money or anything like that, or lose their jobs. But as a dividend investor, when the market's down, you have to capitalize. So this is about seizing the opportunity. This is a great quote that you can put on your phone. So here's my first stock. This took a huge hit when the market dipped recently. I needed to capitalize on it. I sold it at the right time and bought it back. Normally you don't want to panic sell, but I knew the market was going to take a hit just by seeing the fundamentals. So I sold it and I bought it again, and I actually got way more shares. I wanted to capitalize on it. It's giving off a great dividend. This was beating the S&P. It's a great rate for dividends. So that's another thing that I capitalized on. And I actually got more shares. I'm going to reinvest. I'm going to follow the drip. I'm going to let the money make money. So this is the first one, Arbor Realty Trust. So this is a stock that has been out. This is a photo of the group when they came in 2014 and the NYSE and Euronext. This is not March 19 of this year. This is back in 2014. This is right around when I became a registered nurse. I wish I knew how to invest back then, because I'd be rolling with people like this and rolling with these companies. So here's ABR as a symbol, Arbor Realty Trust. That image was in 2014. It is a REIT that invests in a diversified portfolio of multifamily and commercial real estate, bridge and mezzanine loans, preferred equity investments, mortgage-related securities, and other real estate assets. That was on rate.com. Honestly, it's a great rate for income. Last time I checked, it gives off a 11% yearly dividend. It gives off a quarterly dividend, and I'm going to show you some more information on it and why I picked it and how it's done against the S&P. So make sure you keep on watching. It's a great rate to diversify. So when you have a dividend portfolio, you want to have some real estate in it. That's my honest opinion. You got to diversify. You got to have energy. You got to have defense. You got to have stocks that I actually invested in marijuana stocks, a marijuana stock. So, that's another thing. So just keep an eye on that. So it's a great rate to diversify. So here's some facts. Arbor Realty Trust since 2018 has beaten the S&P. Obviously, it took a huge hit because real estate and investment trust took a huge hit. It looks like their sector took the most amount and took the biggest hit. So that's something that you have to look into. So that's it's kind of a blow, but it will bounce back. It has bounced back. This is in February 7th of 2020. It was $15.21. Right around this time is when I sold it, and then I bought it back. So I think I got it at like $5 a share or something like that. I got a really good deal on them. So this is how they've done against the S&P. So 115.74 to 61%. I like to see how they do in the past 5 years. I'm sure they will rebound when the market gets up. Again, it's always a risk, but I really like this real estate investment trust. A lot of people are having articles and saying that they're a strong buy, so just look out for that. So here's our quarterly dividend distribution. This is it is going up. This is what really attracted me to these guys. One in 2018, it took a little bit of a hit, but it has rebounded since in the past few years. 2017, it was 16 cents a share on March, and then it jumped up in May to 18 cents, and then August 18 cents, and then November 19 cents, 21, 25, 27, 28, 29, 30. So it's increasing its dividends. That's something that I like as a dividend investor. If it's not increasing its dividends, you better have, my honest opinion, if you're investing in a stock that has not increased its dividend over time and has decreased its dividend over time, you better give me a good explanation why you invested in them, or you got to be a really good bullshitter to try to get me to invest in your company, because I'm not going to buy it unless if I see your dividends increasing or has potential, or is everybody's talking about it. Usually they will tell you that you should sell the stock if it's not hitting a really good jump. Now, AGNC Investment Corp, they're one that has decreased their dividend over time. They give off a monthly dividend, but they've decreased their dividend. So why should I invest in them when people like this, like ABR, has increased its dividend over time? So that's what's attractive to me, is increasing dividends. This will add to my dividend portfolio arsenal. This will also help me try to beat the S&P, because this is on my Etrade portfolio. So I want to make sure that I'm beating the S&P, and these guys might help me in the long run. So here's a risk. It is risky, but again, it is good to diversify. Rates were really hard during this outbreak. I would consider this a very aggressive stock. I'm pretty sure, don't quote me on this, but Global X SRET has ABR in it. So, they are in some ETFs that give off pretty strong dividends. Don't quote me on that, but you can search on many sites like Zacks.com. I have a review on Zacks.com, so don't be, a stranger to check that out, and why I described that you should invest in those guys. So don't put all of your eggs in one basket either. So that's the thing with the risk. So you got to diversify your portfolio. It is a REIT, so keep an eye on REITs. They're very good stocks. I have a video out too of what is a real estate investment trust. I will post that in my description and my link in my comment post, so you can check that out if you don't know what a real estate investment trust is. And REITs, they have to give money back to the investors, or else they have to pay taxes. So there's a loophole with REITs, and I will explain that in my video. So make sure you check that out. So be smart. Obviously study graphs and understand what you're doing in the long run, because I don't want this to bite you in the ass. I want you to make money. I want you to make passive income. We're all dividend warriors out there, and investing became a hobby, and that's why I have a channel with this. So here's my next stock. This gives off a monthly dividend stock. I added this to my arsenal on M1 Finance. I really required monthly dividends to keep the machine going, the pie chart. So each stock is giving off a monthly dividend. Well, let me just give you an example. I have AT&T, I have IIPR, I have Stargate, I have, who else do I have? Let me just get my phone out. I'll just give you an example of my, I have Pfizer. Let me just go on my portfolio real quick, and I'll just tell you, like my example, I go off of a grid, which I will show you in a future video. So I have Pfizer, Coca-Cola, I have Iron Mountain. So each of those guys give off a quarterly dividend, but the way I have it in my pie chart, I will get monthly dividends pretty much each month, because these guys give off a quarter, and Iron Mountain gives off a certain time. So I have it scheduled so that I can keep on getting money each month, and the wheel keeps on spinning and spinning. So I just needed to get more monthly dividends. I feel confident in these guys. They have increased their dividends over time. It's a little bit slower, but here's my next stock. It's Gladstone Commercial Corporation. They're a real estate investment trust. Glad I have gain in my E-Trade portfolio, but this is Gladstone Commercial Corporation, and I'll explain to you why I invested in these guys and why I see potential and why I like them as monthly dividend. So they are losing against the S&P. Okay, since inception, well, let's just say since the past 5 years, they are losing against the S&P. 2017, they're actually beating the S&P. They were going up. The S&P is going up, but I just like their monthly dividend that they give out. They're not a bond. Bonds are usually stagnant, but they just give off a nice monthly dividend. They're $10 a share last time I checked, and I just need those extra 5, 10, 12 cents. Actually, they give off 12 cents, which I'll show you in the video. So I just need that extra cash to keep the wheel spinning. I mean, I know that stocks are doing this, but so I have Arbor Realty Trust giving off right around like a 9 to 11% dividend, a quarterly dividend. So now these guys are giving off a monthly dividend. I feel very strong with these guys, and I just like the way I can get money and have my money make money and just have it keep on going. Now again, it's volatile because if real estate takes a hit, they're going to take a hit versus a bond, but it gives off a pretty good dividend and there's potential of growth. Here's an example. I'll just tell you why I picked this stock. It's not a bond. REITs sometimes increase their dividends on acquisitions. I will show you a screenshot of their latest acquisition. I'll explain it to you. So it might be lower than the S&P, but like I said, I want to get the machine going. So I want to get monthly dividends to help pay off things in the future, like utilities, gas bill. Well, I have an electric bill that's right around $40. Imagine if I invested in a bunch of shares in that and I just made $50 a month on that. And I just decided to flip it. Just said, hey, I'll take the dividends from these guys instead of reinvesting. Obviously, I don't have a lot in my dividend portfolio, but I do want to, have a $100,000 dividend portfolio, and I might expand it even more to maybe be 200,000, 300,000, 400,000, who knows? But I have a goal right now to get to 100,000. These guys will give off monthly dividends to help me buy more shares so that I can get more stocks, or if I decide to cut, or slash a certain stock, my M1 Finance, add a little bit more, or maybe, in the long run, if I have 20, 30 shares of a company, and then I just start getting bigger and bigger and bigger, and I just decide, oh, I want 1% in this stock. Oh, I want 3% in this stock. So these guys will help me do that, and I'll get more and more and more dividends. So I'm kind of treating it as a retirement pension. My philosophy, I want to have my long-term goal is I want to make $1,000 to $3,000 a month on monthly dividends and $2,000 to $4,000 a month on my quarterly dividends, and these guys will help me. So again, I'm still going to work. I really enjoy being a registered nurse. I like helping people out. I'm actually picking up with this outbreak that's happening, so I'm really helping my group, but I want to have multiple sources of income. I'm picking up to get my 401k bigger. I actually am going to speak with my financial advisor to see what he thinks on a certain portfolio and everything, to see what I got. But, I want to make money. So, I believe that you should have multiple sources of income, and that really the first recession that hit in 2009, it wasn't first recession, but 2008, 2009, right when I became a nurse, I wanted to figure out ways to make passive income, did some YouTube searching, Google searching, became inspired from a lot of you guys making videos. And I'm like, hey, let me make a channel. Let me talk about my stocks. Maybe I can help you guys out too, make more money on your dividend portfolio, or open up your mind, because it's always good to mix and match philosophies. That way you can develop your own philosophy in dividend investing. I'm still expanding. It's not just like I'm just going to be in one spot all the time and just have a thick head. I mean, I'm going to listen to input. I'm going to ask people, people who are better investors than me. I actually give tips to people who are better investors than me, and they look into stocks. So it's always good to integrate and collaborate with people that are dividend investors, and watch some videos or follow some people or make some comments or Instagram comments or something like that. it's good to diversify and have a philosophy. So here's a dividend history. Here's part one. 2007 is 12 cents a share. 2008 is 12.5 cents a share. So it's going up. It's going up. Here's his dividend history. Okay. So, 0.125, 2007, 0.12, 0.125. Then it's 0.125, then it's 0.12515. So 2019, it was 0.125. So April, May, June, July, August, September, October, November, December, January, 0.12515. So it's slowly going up. I mean, it's kind of like, reminds me of Stag, the stock, it's slowly going up, or LTC. So it's slowly going up. So that's a good sign, Look, I'm getting, a decent amount, but it's slowly increasing. And on top of that, look at this. So on March 10th, Gladstone Commercial Corporation, symbol GOOD, announced today that it acquired a 504,000 square foot industrial distribution in Crandall, Georgia for $30.3 million on March 9th, 2020. The initial capitalization rate of the acquisition was 6.3%, with an average capitalization rate of 6.9%. Property is 100% leased to Hire Appliance Solutions and wholly subsidiary Worldwide Appliance Hire Smart Home, constructed in 2020 to build suit with 10.5 years remaining lease term. The tenant utilizes property to import and distribute appliance components in the Appalachian Regional Port from the Port of Savannah. The acquisition is consistent with Gladstone Commercial's growth strategy of acquiring high-quality, mission-critical access and credit-worthy tenants. Perfect. So these guys are acquiring, they're growing. So this is the good thing. Here's another quote. The acquisition of the Hire facility continues our strategic expansion in our targeted growth locations. The facility serves as a tenant's core import and distribution facility. It's nearby manufacturing facilities across the South. The investment is a great addition to our portfolio, improving the weighted average lease term and increasing the allocation of high-quality industrial property, says Buzz Cooper, Senior Managing Director of Gladstone Commercial. Further, it kicks off Gladstone Commercial's Inland Port Initiative. And then Bob Cutlip, president of Gladstone Commercial, agreed this transaction promotes our strategy of increasing our allocation in industrial buildings and strong growth corridors after the next few years, and we are excited to add the portfolio in high quality real estate occupied by credit-worthy tenant. This is what I like to see in investing in real estate investment trusts. They tell you what they're doing. They're honest. They're out there. This is why I like Fundrise. This is why I like these guys. This is why I like Realty Income, Stag, and all these other acquisitions. They tell you straight up what they're doing. They're being honest. They got the numbers. That's what you want to see as an investor. So this is why I put them in my arsenal. So like I said, the more acquisitions, the more potential. Again, see my video lecture on REITs. REITs are a great way to diversify your portfolio. Money makes money. That's my monthly dividend stock that I just acquired. So this is what I like. I like to see growth. I want to make money. I want my money to make money. This is what I like to see. Here's my third stock. This is another REIT. I put some money in my M1 Finance portfolio. It's a great diversified rate for my M1 Finance arsenal. It'll give off a great dividend. It took a huge dive recently. I see serious potential as this can go up and grow. Mary Jane lovers, Cheech and Chong lovers, I'm giving you a hint right there of what the third stock is. Innovative Industrial Properties. It's a great stock with huge potential. It's a REIT. Gave off a bonus and gave off dividends. Capitalize on its potential right now. I absolutely love this stock. This is probably, Unilever was one of mine. These guys are probably number 2. This is my favorite one. I am not a toker. I actually, if you're into exercise and stuff, actually this can screw up your endocrine system. So, look into that with marijuana and your endocrine system as a guy. This was killing the S&P. It was just murdering it. So this is how they are since inception. They have killed the S&P 252.68%. They are a hot stock. They give off a nice quarterly dividend. This might be the stock of the decade just because of the business that is blowing up. Look at this. So here is its dividend history, 15 cents quarterly, then 25 cents, then 35, then 45, then 78. And look at these special dividends that they hook you up with. That's pretty nice, isn't it? I'll take that. So, the quarterly dividends and then special dividends. So they're really hooking us up as investors. So, this is kind of like a gold mine right now. And this is a stock that you might want to consider in your dividend portfolio. So again, I feel very confident in these stocks. This is all rates today. This is a rate day for Darth Dividend, but you got to get your portfolio rolling and go from there. So again, let me sum this up with rates. A great way to diversify your portfolio. Make sure you watch my video on what is a rate. It's really important to understand how you can get discounts. I quoted many people with understanding the rate and the law. They're great to diversify your portfolio. I don't own Vanguard VNQ. Actually, I had it in my, technically I have it on my Acorns account, but I'm going to switch it over. I don't know, Acorns, not a fan of them. I'm probably discuss that in my next video, but it's a great rate ETF to consider. It has a lot of rates in it. Fundrise likes to compare themselves against Vanguard VNQ. So if Fundrise is comparing the Vanguard VNQ to their portfolio, must be a pretty serious deal. VNQ is a very good real estate investment trust exchange traded fund. I do not have it in my dividend portfolio. Honestly, I wish I had it added on my 401k on the side, but I will say money makes money. This is something you guys should consider, these three rates to your dividend portfolio. Again, I'm not a financial advisor, and I have a disclaimer in the video describing that, but these are three stocks that I think are very hot. So again, thank you for watching this video. Make sure you subscribe to my channel and hit the notification button so you don't miss future videos. Make sure you give me a like. I mean, a lot of people love these videos. If you like this video, give me a like. So that way more people can see this and help them out to their arsenal. So the more dividend investors for companies, the better. The more attention these videos get will help out. And if you're new to the channel, if you give a like or people are giving likes and you didn't have a chance to see the video, this might pop up for you to catch. So that's pretty much what I have to say this week. And be very smart with your money. Who knows what will happen? Wash your hands. Be safe. Don't put your hands in your face. If somebody's sick, if you're sick, stay away from people. Don't get the elderly people infected or the people most vulnerable for infections infected, because they're the ones that are the high-risk population. People with a very low ejection fraction with congestive heart failure, people with hypertension, people with diabetes, people that are elderly, people that are cancer, people that are what else? They're taking immunosuppressants or anti-rejection medications for their kidneys, or people with renal failure. Those are the people that you want to look out for. Don't just, be selfish. Don't just party, because your friends are having a party. Look out for each other. Don't get your friends infected, and be safe. So hopefully we'll all get through this together as dividend warriors and dividend investors. I hope your shares and your dividend portfolio gets better. I want to see people do well. Let me know how you're doing with your dividend portfolio. And again, thank you for watching this video. You guys are a fantastic audience, and you guys have been phenomenal on my Instagram as well as my YouTube. So if you're new, again, check it out. Follow me. See what you think. If you like this video, again, give me a like. All right, you guys have a great one.